This stock is up some 6% after hours, and that's because they've got a beat on the top and bottom lines. Intel turning in revenue of $19.19 billion versus $18.05 expected, turning in non-GAAP earnings per share of $1.42 versus $1.24 expected. Also, on the guide, they're guiding to Q4 of $19.2 billion. That's about the same as this quarter. That's a little bit better than analysts expected. Also, earnings per share of $1.24 versus $1.21 expected. Intel also raises its full year outlook to $71 billion on revenue. That's up $1.5 billion from where they were in July, also raising to a $4.60 non-GAAP EPS. Intel's board also approving $20 billion additional to set aside for stock repurchases. In the quarter that they are reporting now, they did use $4.5 billion for repurchase. Now, I know Stephanie Link was looking at the data center group to see how it was going to do this quarter. Pretty much every group that I can see outperformed, but data center especially, $6.4 billion in revenue for data center here, and the client computing group, personal computing, also slightly higher, but data center, we only expected maybe, or analysts did, I should say, about $5.6 billion from that group, turning in 6.4. Pretty good. I will be talking to Intel CEO Bob Swan after the call. You can look for that in Squawk Alley tomorrow, guys.
Yeah, we are looking forward to that, John. Stephanie, good. The numbers, really good. Really good across the board. I mean, data center is telling me that CIOs are spending a little bit more, right? I mean, they actually really decelerated the last couple of quarters, so that's a very good sign. But even PCs, we expected that to be good, and that was better than expected. So they have a lot of cash. Stock is cheap at 11 times. I can see why it's up. It's also lagged the group.
Mike,
only up 10%.
6% moves in opposite directions, or 7% now for both Amazon and Intel. Talk to us about the setup for each stock coming in.
Yeah, I mean, Intel has been a little bit, it's been range bound, but well below its highs in the high 50s, hit twice so far in the last couple of years. So it seems as if expectations were pretty modest on Intel. I mean, I thought Amazon had relatively lower expectations as well, just based on how the stock had really not gotten much altitude. Obviously, the market was expressing some kind of concern of what was manifest in AWS business. What I find interesting, of course, we have no idea how it's all going to wash out, but the overall market, like the S&P ETF, is not really showing like it's going to have much of a reaction to the Amazon miss and the stock going down. So we'll see if the overall tape can continue to absorb the noisy earnings report.
And we'll see if growth can outperform value like it did today, or does it reverse? I mean, it's like been a daily thing. It's nuts.
Exactly.
Tim, your initial take on these Intel numbers. I mean, you've made the point that this is a stock that has looked cheap for some time. What are you looking for in the report and also in the call?
Well, certainly the stock has been perpetually cheap, trading at a low teens multiple at best, and it's really considered old tech. And the street really made a mistake about 16 months ago when it assumed that all of that server business was going to go to AMD because AMD was making a thinner chip. So what we're really seeing is that these are long-term contracts, and Intel is still the behemoth in the business. So this is a really good report and really sets the stock up as it moves past $52 a share to get out of that range that Mike was talking about. So we're pretty bullish on the call, and we also want to hear on the earnings call what they're talking about for capital expenditures, because that's really the next leg in this, is how much money do they need to spend to stay current.